Hey everybody, welcome back to Everything Money. We're glad you joined us again. As always, we're here talking about stocks, investments, business. Today we're talking about Zoom, Paul. Zoom. Oh my gosh, this is the industry standard in meetings. And boy, did this take off last year. As we all know, every meeting that used to be in a boardroom got switched to Zoom. And it's become a part of people's life, Paul. It's a verb now, right? Let's Zoom. Let's have a Zoom chat. I use Google Meet. You know, I love Google Meet.
Do you like Google Meet?
Well, I can just click it. No nonsense. You don't have to do the passwords. You just get in. But Zoom took off last year. Obviously, we did a video about it last year when it was going crazy. It's back down a bit, Paul. I want to get your thoughts on this company moving forward. Not just a ticker price. Again, folks, we don't just buy and hope it goes up. What is behind this price? We're going to use our 8-pillar analysis to look at the fundamentals of a company. We'll have Paul tell us, is this price justified, Paul? And then if you're looking to trade Zoom, we'll head over to the handsome Mo, who will tell us what they're doing in that glorious Bidnass Nation. The patrons, you know I love you. Paul, let's get after Zoom. Tell me what you know about this company.
Well, so first off, look at this chart. We will look at the price here. This is where the shutdown occurred. It was under $100. Got up to $500 and some dollars.
$588.
$588, and now it's at $350. So if I told you right here, Seth, that Zoom was going to go down 40%, what would you just said to me?
I would have said you're crazy and you're missing out on the growth.
I just keep on to repeat this to everybody who watches these videos, because everybody seems to think that once a stock goes up, the idea of it going down a lot is an unreasonable.
Look at Mo's shirt. That's the tagline of the whole show right there.
That's true.
Come on. But keep going, Paul.
Just remember that stocks go up and down a lot. As Joel Greenblatt says in his book, The Little Book That Beats the Market, go look at any stock, go look at its 52-week high, 52-week low. They're going to be very different in pricing, okay? And it's easier for a stock to go down than up. It's easier to fall than to go up. The same would be said for going to space, right? It takes more effort to go up than down. I'm not saying that means all stocks are going down, but to me, massive rises that aren't justified by valuations will eventually, over long periods of time, see a big fall.
If you're following along at home, we want you to start asking why. You know, people ask me, because we have the show, Paul, what do you got, any hot stock tips? We don't really. We want you to get a formulated plan for looking at a company and devise why is it a certain price? Is it over or undervalued? In a lot of cases, which we get a lot of hate on the show, is why don't these guys ever buy anything? It's because, well, a lot of things are overvalued. I'm guessing Zoom probably still is, Paul. But
and I told Tim yesterday, with our software that people can get, I'm going to start creating a Paul's list of stocks he's buying.
Oh, okay. How nice.
So, $103 billion market cap, okay? So this is already a $100 billion company. They only did $3.28 billion in revenue last year, doing a massive year. So it's already selling for 31.5 times sales, which is a huge number.
Which number do you like right there?
Well, for software businesses, 7 to 9, 7 to 10 times. Because think about it, guys. If this was just PE, when I say PE, price to earnings, this would be a high PE just in and of itself.
Yes.
This is price to sales. This is even harder. Their PE, Seth, 119. That's an X.
Oh boy.
I don't know why it has no profit margin in here, but the profit margin in the last year was roughly 25, 30%. That's pretty good. That's a check mark there. Okay. No dividend yield. Last year's free cash flow was $1.6 billion. Very, very high return on assets, which makes sense because software business, they can generate this kind of returns on assets. All right, so far 1X, which is a big X. And that's after falling 40%. It's 118 times free earnings.
Let's look at pillar number 3, which is revenue growth over the past 5 years. And obviously, yes, last year would be, look at this, Paul. It's crazy.
It's insane. 60 million, 392 million, 828, 3.2 billion.
Oh, Lord.
Okay, so, you have to ask yourself, yes, we are still doing Zoom calls. Are we doing as many Zoom calls as we were a year ago? I would argue we are not.
And there's competition coming now.
Now, as people, Skype's already been big competition before. Google Meet, as you said before.
The big one's going to be Apple. Apple's coming out with Apple Links, and that's going to be that you can basically send a FaceTime link to anybody.
Whether they have an
iPhone product, Apple product or not.
You're in love with Apple. You know everything about that.
Yeah.
I've never even heard of this.
I love this FaceTime links. This is going to be awesome.
Because
then I don't have to have multiple apps on my phone. Just have the link.
I mean, for me, the passcodes and the trying to get people into Zoom chats, it's annoying.
So I don't want to speculate on too much, but I look at it saying, okay, how many people in this world have Apple computers or Apple phones?
Billions.
So I'm looking at going, okay, would I rather use Zoom, which takes a totally different program, or would I rather just use my iPhone and go, let's just go live right here?
Yeah.
Or on my I just look at it going, I do agree that the barrier to entry on this thing is not very difficult, and Apple already has everybody ingrained in their own products.
Yeah.
It's just a matter of time before it goes, okay, let's just go Apple Links. What's it called?
Apple Links. FaceTime Links.
FaceTime Links.
And how many people do we bully into saying, if you don't have an iPhone, we're not going to talk to you or text you,
And
or
that's
you're not going to be in the group chat.
We have a corporate group chat.
Yeah.
We have Crossroads corporate group chat.
Go on.
You are not allowed in unless you have an iPhone. Literally the other day, Mary had to text me and say, hey, Kim just got an iPhone. Can you please add her to the group chat?
Why
I said,
do you
no
why do you insist
I
on
don't
that?
want the green.
Because
I don't want that green BS in there.
And you can't exit chats, and you can't remove people from
You
chats.
can't
because
remove. You
it's an
can't do
SMS.
anything. So that's the thing. If all of a sudden we have to get rid of somebody, we can't get rid of them. We have to start a new chat.
Come on, you are huge with your chats. I mean, you have
We do the same thing with
Listen, I
chats.
think it's more.
We do the same thing with the big friends chat.
Oh,
No
yeah,
iPhones. No non-iPhones.
Shall we get
allowed.
after pillar number 4, which is profit growth for Zoom? What is the problem? I'm sure it's absurd.
I love how you laugh at that, but I thought it was completely a rational statement. Look at Rahman. I want to kill the guy. I want to buy him an iPhone. He's so stubborn.
I know,
right.
but Paul. I try to describe you to my friends and other people, and
Do you?
You're very incredibly disciplined, and the rest of the world is obviously not. So it's hard to keep up with all of your rules.
I offered to buy it for him. I'm like, Rahman, I will pay for the iPhone. Get an iPhone.
That's true. And when we go to Mexico, Mo,
That sound.
That ridiculous sound.
That sure, he gets 7,000 texts a day, and the anthem of our Mexico trip is his phone blaring.
The funniest part is he doesnning even notice. He's like, oh, yeah, I didn't even hear it.
Cha-ching. Go ahead, Paul. Profit
Minus
growth.
1 million in profit 4 years ago, a positive 872. That's a check mark. Now remember, guys, we don't have 5 years of data on Zoom. That's why only 4 years are showing up there. Makes sense. Shares outstanding,
Pillar number 5.
237 to 293.
We're still silly.
Big time. Okay. So this software right here, we created the software due to demand from people. I was using other software that was $200 to $500 a month.
This
People
is
were like,
last
hey,
fall.
how do I get the software?
Yeah, last fall, everyone kept saying, where do you guys get this data? We were using Y charts. Go ahead, Paul.
Yeah, so we created the software, but we also decided to build this, and I hate to use the word community because it's so overused, but that's what it is. We have 4,200 people now who buy our software every month. They get, let me actually pull up exactly what they get, but it's an amazing thing we do.
This is Paul. This is part of the Patreon. If you've ever joined a Patreon and want to be a patron, join now. The link is in the description below. You can have the software within the hour. This is a guidance tool you can use to get all the data. You can look at news, look at 10Ks, and it's an incredible software offered just to our patrons. So join the Patreon below, and you get access to this amazing software, which, Paul, we keep slamming the patrons with amazing upgrades every single month. We beat all of our deadlines. It's incredible. And tell us about the
And we have
pricing.
the app too. So the monthly cost here is $25. Guys, I'm very big on building demand. It was $8 before. It's on its way to $49 a month now. So it's 80 cents a day currently. Our competition is $200 a month, $200 a month, and $35 a month. But look at all the things you get right here. Mobile app, 8 pillars, 30 years of financial data, stock analyzer tool, which is amazing. Daily content, access to all 3 of us, real estate calculator, stock screeners, retirement calculator, Discord community. You can talk to all 4,000 people in organized chats about whatever investment or idea or life or whatever. I mean, we just had somebody in one of our chats say, he's like, I consider you guys family, and somebody in my family just became terminal with an illness, and they're going to die soon. And this is something he's like, I haven't told anybody but you guys. I mean, this is pretty incredible stuff. All for 80 cents a day. Guys, no brainer. Go do this. You'll learn so much. The exclusive content, 2 videos a day will be starting here in the next couple months.
Let's get back to Zoom. Again, we're looking at Zoom in the financials. Pillar number 6 is current assets over current liabilities. Paul, how are they doing with that cash?
So we go to the balance sheet. I imagine this is going to be a very big positive. In fact, I would argue that they're probably going to have more cash than total debt. 5.34 versus, I was right, 1.53 in current liabilities and 1.7 in total liabilities. I love younger tech companies because they tend to have very, very little debt overall. So this company has 3 times more cash than all of their liabilities combined. What this means is, let's say at home, you have $100,000 in your bank account, just your checking account. You have enough money in there to pay off all your mortgage, student loans, credit card debts, car payments, everything. That'd be equivalent to you having only $33,000 in all those debts combined. Not per month, total. You could pay it all off 3 times over. That's what Zoom has.
Let's take a look at free cash flow growth. This is the most important pillar, Paul. Let's just come out and say it. Free cash flow. You want to see that free cash going. This will help us come up with our desired market cap. Look at this.
Negative 1 million to a positive 1.6 billion. Check mark. Now here's the deal, guys, about this company.
Oh my gosh.
Is it sustainable? Is this cash flow and revenue and profit sustainable? That's the big thing. Even if it were sustainable, I have a hard time believing that 118 times profit and what's essentially 80 times free cash flow or something like that is a sustainable model. We're going to use our stock analyzer tool next to kind of get an idea of where things are going. But in the meantime, let's go to Mo for the charts. But I think we created a stock analyzer tool to kind of get you an impression of what you should pay for every stock.
If you're interested in trading, you can join the Patreon Bidnass Nation, and you'll have access to Mo on a daily basis. He makes videos and talks about trading. Look at that, Mo. I see how we doing over there.
So I don't usually start with the daily chart, but I want to just show you guys. This is zoomed out about 6 months, and you can see that the stock price hasn't moved. It can't get off of these moving averages. Even if we go to the 1 month and just take a look, it's literally stuck between the 100-day and the 200-day moving average and just keeps bouncing back and forth. So this is something that is going to need a lot of volume from the overall market. Zoom has gone up with the market. Zoom will either keep going up with the market or it's going to come down with the market and be one of the leaders down. So let's go to the long-term chart and just see what we can do here. So right now, it has moved into a downtrend just this week, maybe on Friday. And man, you can maybe get away with shorting this, but you're not going to get much lower than this 324 level. I think there's better tech stocks out there for you to short than this one because you are just going to face a ton of resistance in different places. I think there's going to be a battle between the selling volume and the long-term volume.
It seems like the excitement behind this stock has
Kinda
sort
gone.
of wavered a
Yeah.
bit. So
Yeah.
I'm not surprised to see this, of course, Paul. Go ahead, Paul. Show us the stock analyzer tool.
But you make a good point here, Seth. No stock is exciting forever, and not many stocks are going to be dead forever. You have to decide the right time. I sit there and argue, wait for people to lose their interest in a stock fully. So what our stock analyzer tool does is it allows you to put in low, middle, and high assumptions, okay? Starts with revenue growth, share change, profit margin, etc. I put all my assumptions in, but the one I want to focus on here is revenue growth. I put in 20% to 40% on a 7-year analysis.
This is total growth over 7 years?
Revenue growth. So what this means is on the low end, I'm assuming revenue of $12.5 billion in 7 years. On the high end, I'm assuming revenue of $36.9 billion. That's 10 times larger 7 years from
So
now.
the revenue last year was 3.2 to put in
Oh,
perspective.
I put 3.5. So it's
Okay.
So the whole point is it's going from 11 to $32 billion in revenue in my range. That's a lot of revenue growth. So for those of you out there who say, Paul doesn't understand growth. Yes,
10x,
I do.
baby, yeah.
I just want to pay a reasonable number for growth.
Hard to argue
If you
with that
join,
one.
you can be able to see the video, explains the entire stock analyzer tool, but it factors in all these things, including buying back shares, price of free cash flow earnings. And guys, look at this. The stock's currently at 53. On its best assumptions out there,
Rosiest, you say.
the rosiest assumptions, it's a buy. It assumes $800 value today. But on everything else, it's way too overpriced.
Yeah, you would have paid $120 less than this, huh?
And that's assuming my middle assumptions are still good. And my middle assumptions are 30% revenue growth in the next 7 years, which is still how much? 30% revenue growth over the next 7 years would be times 3.2, would still be $20 billion in revenue for Zoom. Is that possible? Sure. Is it probable? I don't know with all the competition out there and what's really keeping them exclusive.
Yeah.
I don't know. I really don't understand what could possibly be. I mean, again, is it possible? Absolutely. I'm very big, though. Your job as an investor is to make reasonable assumptions and buy for a discount to those reasonable assumptions. So what's the stock worth? I don't even want to give you a price because you're going to hate it. But I'm not buying it even close to, I'm not buying it. I'm buying it probably sub 100.
Mm-hmm.
And that's even might be aggressive on that standpoint. But sub 100 is probably what I'm buying it for, maybe 150. Assuming I think the growth potential is still there. And I just think with the competition out there and how much they're diluting people and their shares, I just have a problem with that. Oh, and by the way, that assumes no more shares. That high price assumes no more shares are issued. So I sit there and say there are way better tech companies out there with more diversified, products that can get more revenue. I think those are the better options out there.
Yeah, Zoom, they live and die on video conferencing.
Which I think video conferencing is going to be very important, but it's just Discord has it, Slack has it, everybody
Everyone
in the
has
Facebook has it, Instagram has it. There's an Instagram video chat rooms for your friends, right?
Yeah.
I'm just sitting here saying, be very cautious about this company.
That's our take on Zoom. If you're watching this in the evening, Mo goes live 9 a.m. Eastern tomorrow morning. If you're watching this on a Tuesday, check us out 1 p.m. Eastern. The three of us go live for the big show. Join our live streams. You can chat with us directly. So that's our take on Zoom. Join the Patreon and fondle that thumbs up on the way out. Patrons, you know I love you. See you guys soon.